people think that in order for their family to be paid the lump sum from the life insurance policy, they must have paid for the policy for the 15 years. So for example, in our Wealth Tribers case, people think that in order for these Wealth Tribers BAM to be paid the 92.5 million, this Wealth Triber must have paid for the life insurance policy for the 15 years. That is wrong. And that is one of the reasons why a lot of you fear committing to getting a whole life insurance policy, because you think, wow, in order for my family to be paid X amount of lump sum, is usually referred to as the basic sum assured. In this case, this Wealth Triber's basic sum assured is 95 million. In order for my family to be paid the basic sum assured, I must have paid for the policy for the 15 years. No! That is wrong, because if that was right, then even I would not have bought the policy. Like, there would be no point. Hi tribe, how are you doing? Personally, I'm doing super fine. I am having a good time exploring Guangzhou, especially the food scene in Guangzhou, China. And even if I am on a break from work, I am still having, conversations with Wealth Tribers who reach out to me that want to get a life insurance cover. And I recently had a very mind-blowing story from one of you. So what happens anytime I have a discovery call with someone who is interested in getting a life insurance policy, I always ask them, what's going through your mind, or why are you interested in getting a life insurance cover? And I always ask this question because personally for me, I've always preached that any financial product that you buy, whether it is an investment product or whether it's an insurance product, you always have to attach it to a goal. So I always want to know what's the goal. So I get on this discovery call. It was with a 35-year-old gentleman. He's a Kenyan living in the UK. So I asked him, what's been going through your mind, or rather, why are you interested in getting a life insurance policy? So he tells me that the main reason why he wants to get a life insurance policy is because he wants to protect his mom. And he goes ahead to tell me that he's an only child. He does support his mom. His mom is elderly and she's retired. And so the main goal why he's getting a life insurance cover, it is to protect her. And he told me that he actually doesn't necessarily need me to explain to him how a life insurance cover works, because he's a living example of the fact that life insurance works, because his dad passed on a few years ago and he and his mom were paid a lump sum amount of money when his dad passed on because he was insured. So this gentleman doesn't have kids. His only beneficiary is his mom. And this also goes to show you that even if you do not have kids yet, or you do not plan on having kids, you can still get a life insurance cover. It's just that the question is, what is the goal? Why do you want to get a life insurance cover? And so, for example, I have shared on this platform before that I do not have kids yet, but I still got a life insurance policy because, as I said earlier, as long as you're an African, there's almost always somebody who depends on your income for survival. Even if they do not fully depend on your income for survival, there's somebody who depends on your income for survival. So I said, like in my case, my beneficiaries are my nephews and nieces. So, and that can be changed. I always say that if you get a life insurance cover now and write, your parent, you can always change your beneficiaries to your children later on when you get them. And the other important thing of getting a cover early is the younger you are, the cheaper it is to insure you. And this also translates to the older you are, the more expensive it is to insure you. Practically, what I mean when I say this is, think of it as, imagine a 25-year-old who wants to get a life insurance policy where they are able to leave their family 10 million shillings. When they eventually pass on, whether in old age or prematurely, let's say this 25-year-old wants to leave 10 million shillings to their family. This maybe a cover like that one can cost, for example, that 25-year-old, let's say 4,000 shillings per month. But the same cover, if a 40-year-old, a 45-year-old, a 50-year-old buys the same cover where they want to leave 10 million shillings to their family, it can cost double or triple that amount of money. That's what we mean by when we say that the older you are, the more expensive it is to insure you. That's why we say get a cover as young as you are or as soon as possible, because it's going to be cheaper for the monthly premiums. So back to our wealth triber. What was the mind-blowing thing that happened during our discovery call? So he had already shared his goal. His goal is to protect his mom. So, and he already understood how a life insurance policy works. So we immediately got down to the math. So I asked him, so remember, he's 35 and he's a non-smoker. It's important for me to mention that he's a non-smoker because if you're a smoker, it is more expensive to insure you. Again, why? I explained on this platform that, of course, if you're a chain smoker, you are exposing yourself to diseases, and therefore the insurance provider will see you as a riskier person to insure. So he is 35, male, non-smoker, and then I asked him how much money can he afford to put towards getting this life insurance cover. So he told me that he can afford 60,000 shillings per month. So his monthly premiums is 60,000 shillings. So the benefits is what blew my mind. So first of all, there are 3 key benefits that you can get from buying a life insurance cover. The first one is protecting your family or protecting your beneficiaries, whoever your beneficiaries are. Can be your children, can be your mom, can be your dad, can be your nephews and nieces, can be your siblings, anyone, even your friend can be your beneficiary if you have that kind of relationship. So the first benefit is protecting your family or your beneficiaries, to mean that when you pass on, whether prematurely or in old age, you leave your beneficiaries X amount of millions so that they can continue living uninterrupted, at least financially. So this is important because if your beneficiaries are young children, be below the age of 18, it is important for you to leave them a lump sum of money because they are children, they still need to continue their lives, they still need to continue with school, they still need to dress up and all. So you need to protect those kids. But if your beneficiaries are above the age of 18, you leave them a liquid inheritance. So for example, in this case, because our wealth triber is 65 and the mom is above the age of 65, as I said, she's retired. Even in this case, it is protection, because somebody who's retired, that means this person is vulnerable. That means they cannot be employed, and that means they do not have active sources of income. So in this case, this wealth triber told me that if I passed on prematurely, I would like to leave my mom X amount of millions so that she never has to work a day in her life. And I was like, what? Like, I found that to be so sweet, which also reminded me something I've always said on this platform, that for me, when I think of people who buy a life insurance cover, or if you ask me to define what a life insurance cover is, for me, I define it as a life insurance cover is love expressed financially, because he said if he passed on, he wouldn't want to leave his mom to struggle. The mom is elderly, so he does not want his mom to ever be in a situation where she is mourning him when he passed on, or if God forbid he passed on before her. He doesn't want his mom to be in a situation where she is mourning him, she's planning burials and and everything else that comes with losing a loved one, and at the same time she's thinking about, how do I pay my rent, how do I pay my medical bills, and how expensive it is for the elderly to access medical care. So she doesn't ever want even his mom to think about, oh, can I afford to travel? Because a lot of us have that desire that when I'm retired, I would like to travel. He literally wants to make sure that his mom has a dignified life when he's both alive and when he's gone. And now when I say that a life insurance policy is love expressed financially, is because when you buy an insurance cover, the payout is done when you're gone. So it's about your loved ones. It's about the people you love. It's about you as a parent, whether mom or dad, or you as a child who wants to protect your elderly parents. It's about you saying that if I pass on, or if God forbid I passed on prematurely, I do not want to leave my family suffering or struggling to pay at least the basic bills. So as you can see, it's love expressed financially, because it's one of the benefits of getting a life insurance cover. Doesn't benefit you, it benefits your family. Now, the other second reason why we get a whole life insurance cover is because it protects you. Now, you the insured, or you the person who's going to pay the premiums, or you who's going to buy the life insurance policy, it protects you from critical illnesses. The likes of stroke, cancer, kidney failure, heart attack, major organ transplant, etc. So when you get a life insurance cover, you can decide to add on a critical illness cover so that when you're diagnosed, if God forbid you're diagnosed a critical illness, you get paid. And the critical illness part is customizable. So you get to decide whether you want a 5 million critical illness cover, 2 million, 3 million, 10 million. The maximum is 15 million. So it's customizable, so you get to decide how many millions in critical illness coverage you want. So then that means that if God forbid you get diagnosed with a critical illness, it's you who's going to get paid the money, so it's paid in cash. So let's say if you choose a 10 million critical illness cover, you will get paid your 10 million in your bank account, and then you get to decide whether you want to seek treatment in Kenya or abroad. The insurer doesn't dictate where you will seek the treatment, because their job in this case is to pay you the cash amount and then you get to decide how you want to spend it. The other benefit you can add to your life insurance policy is what we call an accidental disability cover. So if any of us got into an accident, there are two bad things that are likely to happen, and the first bad thing is that you might end up with a disability. So if you end up with a disability, how are you going to live? Because we know people living with disability need money to access medical care. They need even to customize their homes, because for example, if you're using a wheelchair, you need a ramp instead of stairs. You probably need a living nurse. There's so many medical costs, or there's so many lifestyle changes that come with changing from a person who doesn't have a disability to somebody who has a disability. So that is why you need to add an accidental disability to your whole life insurance cover, so that if God forbid that ever happened to you, you have the money to navigate the situation. So back to our 35-year-old Wealth Triber, who's a non-smoker. He shared that he can afford to pay 60,000 shillings per month towards his life insurance policy. So what kind of benefits can he get from them? 60,000 shillings. So the first benefit that he can get, of course, is how much money is he able to leave his mom. The amount of money that he will leave his mom when he gets this cover is 92.5 million shillings. And actually, this was the part that blew my mind, because when I did the math, when I keyed in the figures that he's 35 and smoker, male, he can afford to put aside 60,000 shillings per month towards this cover. And I saw the benefits, I saw the benefits that he can get from getting this cover. And the first benefit was that he can leave his mom 92.5 million. I was like, what is a retired person going to do with 95.2 million shillings? For me, I thought that, wow, that's a lot of money. But, when he said that the main reason why I'm getting it is so that if God forbid I passed on before my mom, I wouldn't want her to ever worry about ever having to work or to hustle anybody for money. I was like, yeah, that's the kind of money that you need to never ever have to think of borrowing money or working a day in your life. So I was like, what a way to set the mom up. 92.5 million. Hey, you Wealth Tribers keep challenging me, and you keep these stories, or rather these discovery calls, the stories that you share or the reasons why you want to get a life insurance cover keeps challenging my thought process as to why it's a priority that each of us gets a life insurance cover, especially if we can afford to, because the reasons are endless. It is protecting our kids, it's protecting our spouses, because you do not want to leave your spouse in a vulnerable situation where, for example, you leave your spouse without a source of income. If, for example, you are the main provider, it is protecting our elderly parents if they depend on your sources of income for survival, because what are they going to do when you're gone if they really are your responsibility? So this story just blew my mind. Of course, the other two benefits that this 35-year-old Wealth Triber will get from the life cover is a 10 million critical illness cover and a 10 million accidental disability cover. So if you want to protect your parents, call me. And then let me answer two frequently asked questions about life insurance policies. The first one being, Agatha, what happens if I do not pass on within the 15-year period? Because remember, as I said, this Wealth Triber's policy is a 15-year term, to mean that he's going to be contributing, or he's going to be paying these premiums for the next 15 years. So what happens if he does not pass on prematurely within those 15 years? So first of all, nobody wants you to pass on prematurely. I do not want you to pass on prematurely. You do not want to pass on prematurely. You want to live a very long life. You want to be blessed with a very long life, so that you're in the present, or you're present in your family's life. And of course, the insurer doesn't want to pass on prematurely. Remember, the risk that the insurer is insuring is the risk of death, right? Is the risk of the end of your life. So what if you do not pass on prematurely? It's a good thing. What's going to happen is that after 15 years, you're going to stop paying for the cover. Why? Because it was a 15-year cover. So the time or the time period for paying for the cover has lapsed. So you will stop paying for the cover in year 15. And then what happens when you stop paying for the cover? When you stop paying for the cover in year 15, you are still going to be insured, because here we are assuming that you're still alive after the 15 years. So in year 15, you stop paying for the cover, you're still going to be insured. Why? Because it's called a whole life insurance cover. A whole life insurance cover means that you're supposed to be insured your whole life. Right? So what's happening here is that the insurer gave you an opportunity to insure yourself for your whole life, but they allowed you to pay for that life insurance cover for a short period of time, or for an X period of time, which is 15 years. You stop paying for the cover, you're still going to insured, and the amount of money that was promised to your families is, in this case, for example, this wealth triber is 92.5 million. That money is still 100% guaranteed, and your family is still going to be paid that money. It's just that you have to remember that for a life insurance policy or a whole life insurance policy, the maturity is death. That means that your beneficiaries are going to be paid that money when you pass on eventually. So whether you pass on prematurely, God forbid, or whether you pass on in old age, it is when you pass on that your family is going to get paid that amount of money. So remember, the maturity of a whole life insurance cover is death. That's why we said a life insurance policy is love expressed financially, because you're buying the cover to either protect your family or to leave them a liquid inheritance. Okay, that is question one. Now, the other thing that confuses people is people think that in order for their family to be paid the lump sum from the life insurance policy, they must have paid for the policy for the 15 years. So for example, in our wealth tribers case, people think that in order for these wealth tribers BAM to be paid the 92.5 million, this wealth triber must have paid for the life insurance policy for the 15 years. That is wrong. And that is one of the reasons why a lot of you fear committing to getting a whole life insurance policy, because you think, wow, in order for my family to be paid X amount of lump sum, is usually referred to as the basic sum assured. In this case, this wealth triber's basic sum assured is 95 million. In order for my family to be paid the basic sum assured, I must have paid for the policy for the 15 years. No! That is wrong, because if that was right, then even I would not have bought the policy. Like, there would be no point. So to answer that question, let's go back to the definition, or rather to remind ourselves why we buy a whole life insurance policy. The main reason why we buy a whole life insurance policy, it is to protect our families from premature death. The main reason why we buy a whole life insurance policy, it is to protect our families or our beneficiaries from our premature death. So then, what is the definition of premature death? The definition of premature death means dying 2 weeks from now, 6 months from now, next month, a year from now, 2 years from now, 5 years from now. Which means that if I buy this life insurance policy today, or if this wealth triber, in this case, buys this life insurance policy today, and he dies 6 months from now, will his family get paid in full, or will his mother get paid in full? Yes, because dying 6 months from now is premature death. But Agatha, if this gentleman actually passes on, of course, God forbid, 6 months from now, doesn't that mean that he will only have paid 60,000 shillings towards this policy? Because 60,000 shillings times 6 is equals 360k. It means that if he passed on 6 months from now, you want to tell me that he will only have paid 360,000 shillings towards the policy, but yes, his mom is actually going to be paid that 92.5 million. Is that right? And I'm like, yes, because remember, back to our definition, the main reason why we buy a whole life insurance cover, it is to protect our beneficiaries from premature death. And premature death can happen anytime, even next week. So yes, if somebody passes on 6 months from now, 1 year from now, 2 years from now, a week from now, they are going to be paid in full, even if they had only paid for the policy for 1 month. The only requirement is make sure that you are paying. So that should not be the reason why you're not getting a life insurance policy, because you're doing the math and you're thinking that in order for your family to be paid, you must have paid for the policy for the 15 years or for the policy in full by the time you die, so that your family can be paid. And still, even if you're blessed with a long life and you get to live for the 15 years, which means you will need to pay for the policy for the 15 years, the math still makes sense. Because in this case, 60,000 multiplied by 12 multiplied by 15 is equals 10.8 million. So if this guy lives a long life and he's alive for the 15 years, he will have paid a total of 10.8 million towards this policy. Paying 10.8 million in 15 years to unlock 92.5 million. In fact, more than 92.5 million, because the cover earns bonuses. The mother will get more than 100 million. Okay? So, maswali zinakuanga mingi when it comes to a life insurance policy. But for now, because it's 7:30 p.m. in Guangzhou, China, and I need to head out to go find dinner, I'm going to leave question box here. You can type all your questions and I'm going to answer all of them, hopefully tomorrow. In the meantime, remember that you have access to a free discovery call with me. Come tell me, how much money you can afford, how old you are, how much money you can afford to pay towards the policy per month, and I will do the math for you and I'll help you get a cover based on your budget. So usitishiwe maisha na the fact that there's somebody who can afford to pay 60,000 per month towards the cover. Even me, I can't afford to pay 60,000 per month towards the cover. And yes, I do have a life insurance policy. Mine, I pay 7,330 shillings per month. Of course, I prefer to pay mine half yearly, so because it makes it easier for me. So uliza